Hi, this is Joe Rabil with Invest Like a Pro. I'm going to go through a specific example today, and I really want to put it all together. For the last month or so, I've been providing videos showing how I use the moving average environment in two different time frames to really find critical setup points, entry points which provide low risk and improve your timing. What I'm going to do today is I'm going to add in MACD and I'm going to add in ADX and show you how I use those indicators together to really identify the best stocks to trade. And also, and this can be applied to the market, as I've said in prior videos, even if you're looking to do it on in a 401k with ETFs. These methods work across all different time frames. If you want to do it on an intraday basis, it will work from that standpoint as well. But I want to focus in on something. It's going to be some monthly, weekly, daily combination, some different things taking place. But I think if you can get better at understanding how to use ADX and MACD along with these moving averages, your win rate's going to go way up, and you're going to start finding the stocks that really have the ability to make bigger gains and faster gains. So please hit that subscribe button if you want to hear more videos like this. This is the type of content I provide on Tuesdays and Fridays. All right, let's go into the videos here. Let's look at the charts. So I'm going to use Anglo Gold AU as my example today. And I'm using TC2000 again. There's a link below. If you have an interest in this software, there's a $25 discount if you go through the link that I have underneath. It provides, over the next few months, I'm going to be showing you a lot of different things, abilities this specific software has, and it's very unique in the way that it allows you to do screening. It's so simple and so fast. I find it to be very, very helpful for me. So I use it every day. So let's go through and look at this stock. So on the left side, I've got a monthly of the AU, and on the right, I've got a weekly chart. The 18 and 40 is overlaid on the price chart, and then underneath, I've got the standard MACD 12.26.9, and I use 13.8 for ADX below. The blue line is the actual smoothing ADX. In both time frames, and green is the plus DI, and red is the minus DI. So just a quick review, when it comes to ADX, green shows the strength of the buyers, the red shows where the minus DI shows the strength of the sellers. And the blue line is essentially an average of the difference between these two lines. So it is a powerful indicator because it's showing you three different things at once. It's showing you how strong the buyers are. It's showing you how strong the sellers are. And then the blue line is sort of giving you an indication how strong the trend is. And it doesn't matter which direction the trend is. It could be in either direction, positive or negative. That blue line will go up if it's a strong trend. So let's go through. I'm going to show you a specific example, something that has really been highlighted. I mean, gold actually has been sort of an unsung hero when you look at what it has done. Not a lot of people talking about it, but a lot of the gold stocks have really kicked in and started to make nice moves. And we've made some pretty good money in these stocks. So I thought I'd just I thought it was a good example. So if we start with the monthly, if you notice what took place, the 18 MA on the monthly chart crossed above the 40 MA on the monthly, and that happened during, or actually the pullback took place during the bear market. So really what you did was, when the crossover took place and then you had the bear market, it caused this to come in the zone and then come out of the zone on a monthly chart. And if you notice what we see on the MACD, so in my book, I talk about a pinch play, and essentially that's what took place on this pullback on the monthly, where the MACD line came down and pinched down towards its signal line without breaking it. And then if you go and you look at the MACD during this period, the ADX during this period, you had a really strong DI, green DI, showing the strength of the buyers was very strong. And then during the pullback, yeah, it came down under 25. But if you notice what took place, because there was still pretty good separation between the green and the red lines, the plus DI and the minus DI, ADX stayed well above 25, which is the horizontal line I've got drawn here. So when I get a pullback in a market that's showing the right type of moving average environment, and ADX stays above 25 throughout the whole pullback, all the way back into, when you get in between the zone between the 18 and the 40, and ADX is still holding above 25, that's a very, very bullish sign. It's showing you a sign of strength. Now, the same thing can be true when you're going to the downside. If the 18 is below the 40 and they're both declining and you get a rally up into the zone and ADX stays above 25, that's also a very bearish sign. So this is sort of the starting point, is what we want on the higher time frame. If we go to the weekly chart here, notice that one of the patterns that I talk about in my book is a zero line reversal. And that's exactly what ended up taking place on a MACD basis. So this came down, started to turn right as the signal line was reaching the zero line, the MACD started to turn back above. And we can see that the trigger took place as price came back above the 40. Now, if you notice, the 18 was below the 40 and price closed below both lines. So this is the same moving average setup that I've described the last couple of weeks. So I like using the combination of different things. All this is in my book. All these patterns are in my book, but I wanted to make sure I made a pretty good point of this. Now, let's take one more look at the ADX. So if we go and see what took place on an ADX basis on the lower time frame or the weekly, you had pretty strong ADX because it was well above 25 during these rallies to the upside. You had a strong move here and then a strong move here, and you can see the blue line got up to 45, 50 on both of those peaks. And then during the correction, and even through this very, very difficult period here for this stock where it broke both moving averages and sold off to the downside, notice how weak the ADX was during this period. So let me just make sure you can see this. So as the stock was selling off through this period, ADX couldn't even get back above 25. So what that tells me is that, yeah, there was a harsh sell-off taking place, but when you compare the strength of the sellers, the red DI couldn't even get above 25. So if I had a red DI making a big move up to 35 or 40, I would really shy away from this as a potential as it crossed back above the 40 here, because it would tell me that the sellers are a little too strong in the near term and they've sort of taken over. And normally it takes more time to get a reversal back to the upside. But in this case, if red DI cannot even get it back above 25, now all of a sudden I'm thinking any type of strength back to the upside and I can take my price, my moving average signal and get long. And so that's kind of how this worked out on a monthly and then a weekly. Now, I'm going to switch this chart to a daily because I want to show you why this works in different time frames. So we've already shown how this took place here on the monthly and the weekly. Notice what took place after, though. You had a really strong move on the weekly, and then you pulled back. Now, in this case, you didn't make it all the way back to the moving averages, and I'm totally okay with that, especially when, if you look at what took place on the price action, you had a really strong move and then you pulled back to price support. So don't get too hung up on forcing a stock to come back and touch the 18 or come into the 18, between the 18 and the 40. You have to take it in the context of what's going on with the price action. And because the move was so strong, you have to accept the fact that sometimes you're not going to get a move all the way back to those MAs. So I would view this as a very strong move to the upside and then a nice pullback. And if you notice, again, let's take a look at what was taking place on a ADX basis and a MACD basis. First of all, the MACD. So we got the pullback after the strong move to the upside. Notice what took place here. We talked about the pinch play on the monthly. If I go back and tell you, so this is the pinch play on the monthly, right, on the pullback. Now, let's look at what happened on the weekly. We got the same pinch play take place coming in here into support, and we got this little pinch where MACD came down close to its signal line. And so that's sort of your highlight on the higher time frame and say, okay, I really ought to start taking a look at this on the daily chart. But let's take one more look at the ADX. So I'm going to expand this out a little bit. And if you notice, when this was pulling back, So we had a strong move to the upside and then we pulled back. But if you notice what ADX was doing, it crossed above the 25. 25 is a very key line. If you're crossing above the 25 level, it's telling you they have the ability to trend in that time frame. And you're starting to kind of grow in the strength of the trend. And then when we got the pullback on the weekly and it came down to support, notice how the ADX line did not turn down. It either stabilizes here or it keeps rising. And when that takes place, it starts to highlight for me, okay, this is a stock I want to look at on this pullback. So if we look at what's taken place, the MACD is giving you a bullish pinch play, and the ADX has got a rising environment showing you there's pretty good strength. Even through the pullback, it's telling you that this is a pretty strong bullish trend. So let's go take a look at the daily now. And then again, you'd want to go back and look at the prior videos I've talked about with the easy moving average setup. It's been out there for probably 2-3 weeks, something like that. And on the higher time frame, I say I want a rising 18 and a rising 40, where the 18 is above the 40. On the lower time frame, I want the 18 below the 40, and I want price below both. And then I'm going to take a cross when this price crosses back above here on a closing basis. That's your buy signal. And so that would be right around $26. And then you're going to put a stop in underneath this low here. So if I'm buying this stock at 26, I've got to stop in around 23.5. And then I'm going to play my targets going up to the upside. So let's take a look at the daily and say, okay, I know the moving average environment is what I want, but look at what the MACD is doing here. So we had the 18 cross down below the 40, and then look at the MACD doing a perfect zero line reversal. Not even crossing down below, it just hovered right at the zero line. And then the trigger is confirmed with the crossover of the moving average. And MACD starts to cross over its signal line. And again, through the pullback, notice how light the ADX was. In other words, the MACD could not get, even through the decline. Yeah, DI crossed up a little bit above 25, but look at how low the ADX was during this pullback. So this is a great example, and you want to go back. If you read my book and then you understand and look at some of these videos, you want to go back through and look for examples of this and see if you can see it on 2 consecutive time frames like this. Sometimes it takes place in 3 time frames, and I'll be giving you examples of that as we go forward. But if you can do this in 2 time frames, where the higher time frame is telling you the strength of the trend and giving you a pullback, and showing you the pullback is not very strong, meaning you don't have a lot of strength in the sellers during the pullback phase, and MACD is confirming that. And then you go down to the lower time frame and realize I've got this the moving average setup, but can I get confirmation on both a MACD and an ADX basis? And when you have all that, if everything comes together that way, your odds of success are going to go way, way up. Because just realize something. If you play the game where you say, you know, if I get 1-to-1, in other words, if I bought this at 26 and I stop it out at 23.5, I'm risking $2.50 there. So if I get a move of $2.50 in my favor, I know for the way I trade that is a win. It might not be a big win, but it's definitely going to be a W for me. And I'm going to take a partial profit, probably like a quarter of a piece off, and I'm going to go to a break even, and I'm going to see if I can turn this into a big winner. But just getting that stock to that first target is going to put you in the win column. And I'm telling you guys, you start to trade this way and your win rate starts to go up, and you start to use MACD and ADX to help your timing and in your stock selection. You'd be very surprised how well you can do. I think you'll do a lot better if you stay on these time frames, monthly, weekly, daily, but you can still do the same thing on the smaller time frames. You just have to accept the fact that it's going to have a smaller win rate. So anyway, I hope this was helpful. Please give any comments you have below and hit that like button. We'll talk to you soon.